All right, it's Monday, February 20th, 2012. The time is 11 p.m. Central Standard Time, and as always, looking at the Euro-US dollar. So let's let's just go through and start off with a clean chart and do some fresh analysis here. So, looking at fundamentals real quick, there is quite a bit going on in terms of the Eurozone. And it's been a lot of back and forth all day. And we finally had some news that Greece has come to some sort of consensus. However, at this point in time, looking at some of those reports, it seems to be the same thing we've been hearing for quite some time now. So, that's definitely a cause for concern, and that leads me to believe that perhaps this rally, and so it's not very visible on a 4-hour chart in this near-term price action, but it'll be clear in a second when we do go down to lower time frames. But this near-term spike that we had leads me to believe that most likely that is nothing more than just a sucker's rally. So with the euro here, we had these pretty much this nice run up here, all right, and we had this trend line that price was following for some time, and then we managed to break below it. Now, when we did that, we actually had a break below this support level, which I would consider as these two bottoming tails here. Price broke below. We came and we challenged the 130 mark, the even mark. So put that in. What we'll do is we'll change the type here, easier to see. And so long story short, price comes into the 130 mark. We see a very significant bid, and so this was a very good way for sellers to collect stops here, as well as take in new shorts and pretty much just push price to the upside here. So as you can see, it's been quite a ride up to the top of this range now, and we're sitting up here. Now, seeing the euro above these highs, so seeing the euro trading above 133, in my opinion, is a tough pill to swallow. I don't think that we've seen enough to encourage that kind of price movement. But again, if we do see some more news-driven events, it's very possible. Now, one thing I want to point out before going any further, it might be better to just point this out on a brand new clean chart here. I'm going to hide my positions for a second. I'll put those back on. We can talk about that as well. But pretty much what I'm looking to do is to get an idea of the near-term picture, and then also of the extended longer-term picture. And so if we look at a weekly chart, you can see that we have quite a different picture here with this reversal bar forming just last week. Right? So I think this could be a game changer, but again, I would need to see price break this swing point here, and then maintain that break as well. So that's a big if. But again, if we do see the positive news come into the market, then that could be a reality. Now, in the event that does happen, pretty much anybody who was on the short side of this trend line break here is going to be in a lot of trouble. At that point, most likely they'll be looking to exit their short position and either join the long side or just take a loss and reassess and wait for things to pan out. Now, another reality is that again, we could push up very briefly, maybe come up to a level of resistance like this one right here, and then just drop down, and it would be another fake out to the downside, right? So a lot of possibilities that can occur here, and in terms of upside targets, I do think this would be the first one, 34.30, roughly in that area, and then we have this trend line, which is still a ways away, and that could change the whole picture for the year. I might look back, a year from now and say, hey, what happened? Right? We thought the world was going to end, and instead, everything's all better. But the reality of this is, even though we have a bullish setup on the weekly, price is still trading below supply. So until we can actually break above and trade higher, we need to respect the selling on the lower time frames and trade with that. Now, if we do break higher and take out the short stops, then of course we want to be long. But until then, this is simply just a picture in the back of our mind as to what could be if we do see that actual buying come into place. Right? Anyways, so this is the weekly. Get rid of this chart. Let's go back to the chart we were looking at, if I can find that. Here we go. This is the 4-hour chart now. And so, like we spoke about, we had this trend line break. A lot of people got caught here and faked out, and then price rallied up, which is pretty typical actually for the Forex market. Now, on the top side here, let's move down to an hourly chart, and we can begin to see what's going on. Again, if we look at the hourly, you can see that we do have a reversal pattern right here, a little reversal inverted hammer or doji, and that there are some people who are currently stuck in this market. The reason I say that is because, as you can see, when price pushed up, it took out this swing point. It took a lot of stops, including mine. I was short with a stop of the high here, and it also pushed past this level of resistance, most likely taking out additional stops and taking in new long trades. Now, once the news cleared up, the market sort of reassessed. In the near term, it did manage to push back down and close inside this prior range. So just that price action by itself, I think, is enough to initiate a short trade, and I do think that in the near term, perhaps we might see maybe this level retested as a sort of a gotcha trade, where people got stopped, got sucked in, and then the market tries to cause the maximum amount of pain, and obviously that would be a return to the next logical place of demand right through here. All right. So if we look at the minute chart real quick, just to get an idea of what happened here. So price was trading lower. We came into this level of demand, right? So we sort of paused here, and then on a 1-minute chart, it becomes pretty clear that something that was news-driven just exploded here, right? So if we zoom out and take this into context, you can see the magnitude of that 1-minute bar. The market managed to capture about 80 pips in 1 minute. And so that was simply because we had a headline that said Greece has pretty much figured everything out, and they have a deal, right? And the reality is that, again, there's no concrete evidence. Just a verbal agreement is a little bit early, at least in my opinion, and we'll have to see some more for a convincing rally. But again, I could be wrong. As London opens up here, if London traders and banks and hedge funds do feel that the euro is undervalued, they will most likely push it higher. So that's to be determined. But let's go back to the hourly and talk about the actual setup at hand here, right? And in terms of the risk to reward, how I'm trading this currently. So, again, trading is all about trading your opinion. And in my opinion, I do think that price will come back down to this level through here. So roughly I'd say 130 half to 130. So I think that this is a good area to expect some downside. Now, my opinion is valid only until, or rather if, we do not break this high. If price does take out this high, at that point, again, that weekly scenario kicks in, and if price can show me that it wants to hold above here, I will be bullish. So, what do we have? We have a level of resistance, tagged it a few times, and then we have a near-term level, a swing high, and price broke both this level and this one, closing back underneath. On a 5-minute chart, you can see that as price closed below, oftentimes I like to collect the spread instead of putting on a market order. So as we come back in the near term to retest this level with these highs, that created a very good opportunity to in fact get short the euro. All right. Now the stop will be at the extreme point, which is up here. I've given it a good amount of room, in case we do get a little bit of wiggle here, so about 8 or 9 pips to the upside, and essentially looking for price to erase this move right here. So in the event that does happen, and in fact we do get down to this level, I will look to move my stop to break even, and then from that point going forward, this will be the final target. And so that is the game plan for the euro at this point in time. I hope that makes sense. I hope it was easy to understand. I know there's, we started off with a clean chart, but we do have quite a few lines on here now. So it's it should be a good trade. I have a good amount of confidence. And again, we are taking in terms of money management. If we take the average fill for this trade and we use a stop, we're looking at a roughly 30 pip stop. We'll call it 35. And then for the target, if we take, perhaps let's say that our first target, or the front of the range that we spoke about, which was 30.5, look at about 230 pips. Let's just open up a calculator here and just do that math real quick. 20 divided by 35 risk, and we have a 6-to-1 risk reward ratio. So this seems like something that is well worth the capital invested, and hopefully we can come out on top. So we'll see how it goes. Thanks for watching, and good luck out there.